Get started. Hello, everybody. Welcome. 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 Tesla stock is down 1.6%, just below $250 per share. S&P 500 is up 1.4%. Dow Jones is up 1.2%. Nasdaq is up 1.5%. Russell 2000 is flat. Oil is gyrating around $60 per barrel. And gold continues to surge up 2% to $3,241. NVIDIA is leading the markets today, up 3%. Also, Apple as well. There's some talk of exemptions from Trump tariff wars. So that might be what's driving these couple of companies. Apple is up 4%, NVIDIA is up 3%, Google is up 3%. And on top of that, banks announced some good earnings. So JP Morgan is up 3%. And folks are putting aside the recession probability for now. On the other hand, yields are surging as well, and flattening a little bit. 5-year Treasury yield is up 11 basis points, 10-year Treasury yield is up 9 basis points, and 30-year coming close to 5% again. 10 years around 4.5%. Earlier today, we had a PPI on core PPI data for March, but the markets kind of looked through it a little bit. They were negative, so deflation. PPI could have some productive power to CPI, but it's dubious. So because of all the tariff talks, we have no idea which companies, who is pulling forward their demand or imports, etc. So we're not going to be able to know really the impact of tariffs for several quarters here, maybe up to a year. And in this time, I think the Fed will be cautious and they're going to hold rates where they are for some time. No rate cut in May, I don't think, even though the market is expecting about 20-30% probability of a rate cut. And even in June, I'm not sure if they will cut. So right now, the probability of a rate cut in May is 20%. In June, 80%. And by December, markets are expecting 4 to 5 rate cuts. I don't know if the market is going to get all that. The budget deficit is really high. Doge didn't cut anything. And looks like Elon's kind of being pushed aside a little bit for now. And I just don't see how the budget deficit is going to shrink, especially with Trump administration's persistence in extending these rate cuts, tax cuts, tax rates. So it looks like the budget deficit will continue for some time, and these yields are probably going to go higher, continue to go higher. Which means higher mortgage rates. Mortgage rates are above 7%. Car loan rates are still 9-10% for new cars, 14% for used cars. To the extent that Tesla continues to offer these low financing rates for the Model 3 and others around the world, Tesla will continue to see lower margins. And I expect Tesla deliveries to drop this year from last year and also again drop next year because of recession. So Tesla stock isn't worth much at this time, and it's trading like a meme stock, and very volatile. It was up about 15%, 20% the other day because of a short squeeze. Same with Nvidia. Same with other meme stocks that you see like Ionic or Palantir or Carvana and a bunch of others. I mean, there's a series of meme stocks now that you can kind of see how. Like even Rivian was up. Rivian is destined for bankruptcy, obviously. Luce, how are you?
Hey, yeah, I'm not sure my microphone is good. Can you tell me?
It's all echoey, but go ahead.
Yeah, like are you still holding your position in Tesla?
Yes, still short.
Do you think there is a possibility of a market recovery, or you don't see it?
Yeah, there's a possibility of anything, right? There's a possibility of anything. I mean, what if Trump comes out today and says, you know what, we pulled back on, like, what if he also caves on China tariffs? That could happen. Trump could announce an exemption for Tesla, Apple, Nvidia, which effectively lowers the average tariff rate. But there's a possibility of anything. Anything can happen, really. Tomorrow Tesla can roll out some FSD update that's perfect, makes everybody robotaxis. I don't think it's likely, so that's why I was short. Go ahead.
And so, Yaman, what do you make of the fact that today banks reported the positive earnings? Because I thought they had like to show some kind of weakness considering the economic events, right? So, what do you make of that?
Well, banks reports are for Q1, and U.S. economy deteriorated throughout Q1, and that really plunged in April. So we're not really going to see that, and I haven't taken a closer look at bank reports just yet, so I can't really comment on it either. But I don't think these Q1 reports are going to show material drops, except in some sectors. I think Tesla will announce a loss. I think automakers are struggling more than others for now. I think their tariffs kind of kicked in a little earlier than others. Um, the demand was already declining for automakers. So some sectors were weaker than others in Q1, but it's still a mixed bag in Q1. But yeah, JP Morgan is a great company. I mean, so led by Jamie Dimon, probably the best banker on earth. Very reasonable, down to earth kind of guy. Very real, as opposed to some of the CEOs that we know. And he leads a good bank. All right, let's go to our usual Reuters. I don't really want to keep this too long today. It's a Friday. Let's read through this article. Hey, Luce, your Intel is plunging to all-time lows. What's going on?
Yeah, insane, right? So there are two news. One is that Lip Bhutan has many investments in China, and many of those companies are interconnected with the China military. So there might be a conflict of interest. And this is something that I don't understand, how Lip Bhutan doesn't make a tweet saying it's bullshit or doesn't matter or whatever. So this is just Intel not being able to communicate. And the second news is that obviously the tariffs, the hike of tariffs in China, but not only that, the fact that China might in fact not tariff chips made from TSMC. And so basically, the only one that is going to lose the market in China is basically Intel, because of the astonishing tariffs that are imposed. And so those are the two big news for Intel. I don't know, bro. Like, Lip Bhutan, it's a good CEO, but I really can't say that it's not the same. Like, it's the same. The company is mismanaged.
Okay, thank you, Luce. We're going to move on from Intel. I'm going to read this article. Wall Street's main indices were muted in choppy trading after China increases tariffs on U.S. imports to 125%, escalating a trade war that has hit global markets recently. While results from big Wall Street banks set the earnings season rolling. Stocks fell briefly on Friday after data showed U.S. consumer sentiment deteriorated sharply in April, and 12-month inflation expectations surged to the highest level since 1981, amid unease over escalating trade tensions. China retaliated after U.S. President Trump on Thursday doubled down on the country by increasing tariffs to an effective rate of 145%, even as he announced a 90-day tariff reprieve on most trading partners. Stocks have been on a roller coaster ride in response to tariff announcements over the past few days. Wall Street fell for 4 straight sessions before bouncing back on Wednesday with the S&P 500 seeing its largest one-day percentage jump since October 2008. Stocks, however, slumped again on Thursday and were about 7% off from levels seen before last week, when Trump's reciprocal tariffs sparked the market rout. St. Louis Fed President Alberto Musalem said it's now closer to his baseline view rather than just an outside risk that the labor market will soften, even as inflation rises due to tariffs. Tariffs are likely to lead a global slowdown that's now inevitable because of the effect of confidence and the near-term effects of the actual economy, said Kiran Ganesh, multi-asset strategist at UBS Global Wealth Management. Meanwhile, JP Morgan Chase gained 2.5% after beating first quarter profit estimates, while Morgan Stanley fell about 1% after reporting quarterly results. Wells Fargo lost 4% after the lender lowered its full year net interest income expectations. So I guess bank results were also a mixed bag. Let's kind of give a updated numbers on these stocks real quick. JP Morgan is up 3.5%. Wells Fargo is down now only 1.6%. And Morgan Stanley is flat. Okay. Despite beating first quarter profit estimates, executives at the banks warned that sweeping tariffs could fuel risks and weigh on economic growth. Mega cap and growth stocks were mixed, with Meta down 2%, Apple gaining 2.5%. CBOE volatility index, seen as Wall Street fear gauge, was last at 44 points, hovering near its highest level since August. Still, all three major indices are set for robust weekly gains, with Nasdaq and the S&P 500 on track for their best weekly showing since November 2024. Investors sought refuge in traditional safe haven assets such as gold, with the rally in precious metal lifting gold miners. Newmont and US listed shares of Barrick Gold rose 8 and 6% respectively. I'm going to get a quick. The Newmont is still up 6%. And then Barrick Gold is up 7%. Yeah, look at this, up 20% in the last 5 days. And then Newmont is also up 27% in the last 5 days. Yeah. Okay. U.S. monthly producer price unexpectedly fell in March, coming on the heels of a consumer price reading, which also showed unexpected decline last month. PPI is still very high. I think core PPI is still about 3%. And this is before the tariffs take effect. Tariffs are going to rise to about 4 or 5. There's some expectations that some people expect the inflation rate to rise to between 4 and 5% this year. So we'll see. Lucia?
So what I'm really surprised about is the fact that Bitcoin is holding. So for the first time in history, Bitcoin seems to be storing value as it's meant to.
Yeah, Lucia, I don't have time for this bullshit. If you're gonna bullshit, just move down to listener so I can do what I want to do.
What is your opinion?
I don't give a fuck about Intel. I don't care about Bitcoin, and I'm losing patience with you. All right, here's what I want to look at. CarMax announced earnings the other day, and their stock was down about 20%. I want to understand why that is, because it has implications for other companies like Tesla, Carvana, and many others. So let's take a look at this report real quick. Phil says, thanks for doing this specific day. Thank you very much, Phil. I appreciate that. CarMax today reported results for today was April 10, so yesterday. And then stock dropped 20%. So, and I want to understand, let's take some notes here, because CarMax is one of the biggest, I think they may be the biggest used car retailer in the country. And I want to see if there's anything we can gain out of this. Fourth quarter and fiscal year ended February 28th. February 28th. By the way, what's JP Morgan's earnings date here? Let's look at that real quick. Looks like March. So they can turn it around earnings in 10 days. That's pretty amazing. And then Wells Fargo is also March. Okay. Yeah, that's exemplary. That's amazing. It's a global company. Anyway, net revenues of 6 billion, up 7%. Retail used unit sales increased 6%. Comparable store used unit sales increased 5%. Wholesale units increased 3%. Okay. CarMax's share of nationwide a 0 to 10-year-old used vehicle market remained at 3.7% in calendar year 20. I mean, that's the one of the stunning things about the car market is how fragmented it is. It's such a, I mean, so many players, both especially on the used car market. Most of them are private, so it's hard to kind of understand sometimes what's going on in the market. Accelerating gains in the back half of the year, reflecting the positive momentum across the businesses, offset losses in the first half of the year. Okay. Total gross profit of 668 million. Yeah, we're not taking the speakers right now. Thank you. Increased 14% driven by unit volumes and strong unit margin performance. Gross profit per retail used unit of $2,300, up 71 per unit, achieving a fourth quarter record. Gross profit per wholesale unit, 1,000, historically strong. Extended protection plans margin per retail unit, $580, an increase of $10 per unit. Service margin loss of $4 per retail unit, improvement of 257 per retail unit. Okay. Bought 269,000 vehicles from consumers and dealers, an increase of 15%. 46,000 vehicles were purchased through dealers, up 114%. But most vehicles are coming from consumers, just kind of trade-ins. And I guess they fill in the blanks, fill in the gaps by purchasing through dealers. SG&A of $610 million, increased 5%. Ongoing cost management efforts supported strong leverage of 770 basis points in the SG&A as a percent of gross profit. Interesting. CarMax Auto Finance income of $159 million, an increase of 8% due to growth in net interest margin percentage. I mean, these are stellar results, and the stock was down. And then they also repurchased $100 million in shares. And yeah, that's really interesting. It's a $10 billion company. These are really good results. So I don't know why the stock dropped 20% like that, especially from low levels. I mean, P/E ratio of 21x. So the commentary. We're pleased with the continued momentum across our diversified business during the fourth quarter. We delivered robust EPS growth driven by increases in unit sales and buys, strong growth in total gross profit, and increasing CAF income and ongoing management of SG&A. During fiscal year 2025, we further differentiated our consumer offering and drove incremental operational efficiencies. Our associates, stores, technology, and digital capabilities all seamlessly tied together enable us to provide the most customer-centric car buying and selling experience. It's the key differentiator. Okay. Um, Let me just skim through to see if there's anything meaningful here that I can share. Online retail sales accounted for 15% of retail unit sales, compared to 14% in the fourth quarter last year. Revenue from online transactions, including retail and wholesale, was 1.8 billion, or approximately 29% of net revenues, slightly down from 30% in last year's fourth quarter. So they have an online presence. It's not growing, though. It's not really growing. We know that Amazon's trying to enter the space. Carvana obviously is a big player in the online space. Total gross profit was up 14%, but that's mostly driven by volume. Retail gross profit per used unit increased 71, so that's about less than 3%, about 3%. So 11% was due to unit, I guess. Um, CarMax Auto Finance income increased 8%. Quarter's provision for loan losses were 68 million compared to 72 million in the prior year's fourth quarter. The allowance for loan losses, $459 million, was 2.6% of ending managed receivables, down from 2.7%. Interesting. So they actually went the other way. So for them, the allowance for loan losses is doing well. I mean, I think Carvana is reaching further into the subprime levels than CarMax is, but we'll see how that works out for them. Um, Credit Corp Group, Australian debt collector. No, that's not what I'm talking about. Uh, Credit Acceptance Corp. So they're down 15% last year, but the stock is stable in the last 6 months. They would be the ones that would get hurt the most in kind of credit crunch kind of situation. But their stock seems to be doing okay. Interesting. Total interest margin percentage, which represents spread between interest and fees charged to consumers and our funding costs, was 6%, up from prior year's fourth quarter, but consistent with this year's third quarter. After the effect of 3-day payoffs, CAF financed 42% of units sold in the current quarter, in line with prior year's fourth quarter. CAF's weighted average contract rate was 11% a quarter, down from 11.5% in the fourth quarter last year. Weighted average contract rate. Okay, 11. Yeah, that's pretty low. I think the average used car rate is about 14%. So that goes to show they focus more on the prime. They finance more the prime buyers. So no issues so far in the prime buyers, and I think that was the case across the country, across sectors in the the months that this report is about. So December, January, February, everything was fine for the prime borrowers. So I think that deteriorated a little bit in April. That deteriorated a little bit April. Before April, it was more about subprime issues. Okay. They repurchased 1.2 million shares of common stock for $99 million. Um, Location openings. We opened 2 new stores in Mays Landing, New Jersey, California. Their 250th store. Amazing. We're planning new store growth of 6 locations, as well as 4 standalone reconditioned auction centers. Okay. Long term, we're focused on growing the business and we continue to make progress toward our long-term goals. However, we are removing the time frames associated with them, given the potential impact of broader macro factors. So this is why CarMax's stock dropped 20%. They pulled guidance. They pulled guidance of their long-term goals. I think that caught everybody off guard. But it's a good company, good fundamentals. There's some competition from Carvana, which I have a short on. Carvana today is about 42 billion, P ratio of 124. And going into a recession, I think Carvana is still a good short opportunity. And I'm looking into adding more shorts for Carvana. And but we'll see how that. There's a lot of things kind of have to come together. We're seeing some dead cat balances. I expected some choppy waters today. Um, I think Tesla stock is extremely vulnerable right now. I think Tesla stock will drop to below $100 per share. And I think today is probably the start of that drop. And I think things are really going to accelerate downward from here, both across the economy and for Tesla stock, and also the deliveries, margins, ASPs. I think Tesla stock is kind of doomed for years to come, and the equity markets in general as well. I think equity markets in general, um, U.S. equity markets are going to have a difficult time for years to come. In terms of returns, I think the country will be fine, but the stock returns are going to be low. So, so that covers CarMax. Let me see if there's any questions, comments. Please request to speak or leave it in YouTube live chat. And let me see some headlines on macro front real quick. White House says Trump going to Saudi trip could be more countries. Tariff rate on China remains 145% level, according to White House. Trump has made it clear that he's open to a deal with China. There was also some rumors today that, or was it rumors or news? I'm not sure, but Trump apparently requested a call with um, Xi after Trump administration said, "Don't retaliate," and then they retaliated, and now Trump is reaching out to them, which goes to show, I think, how weak Trump's hand is. So I think Trump kind of cornered himself a little bit strategically. Um, I think if he goes down this path, the economy is going to crash and he's going to have a massive loss in midterms. He lost, both Elon and Trump lost the independence in a really major way. I mean, it's kind of stunning how fast things changed in the last few weeks here. And I don't really see that. I mean, I made a prediction earlier this year, and I'll post this prediction at the top of our screens. I made this prediction on January 20th at the top of our screens. I said Trump's term will end before 2029. So I don't think he's going to complete his term this time. Even though he kind of pulled back a little bit in Peter Navarro, for example, he has to do a 180. Like none of this is going to change until he does a complete about face. Um, so, rail traffic is hot. I wonder how much of the intermodal is front running the tariffs. Yeah, we don't really know. I mean, there's some, obviously, there's, especially on the commercial front as opposed to consumers. In the consumers, there's some too, but I think commercially, businesses are really incentivized to bring in whatever they can before these tariffs kick in. And they did. Um, but now the tariffs are kicking in, so we'll see what the impact the other side of that, storm is like in April and May. Let me see if there's anything else I want to cover. BlackRock CEO said that we're probably in a recession, if not already in a recession. We're headed into a recession. So that lines up with all the other major commentary that we've heard from people who actually know what they're talking about, as opposed to meme stock traders. And I agree. Um, so we had University of Michigan report today that showed a surge in inflation expectations. And let's see, break. Hold on one second. Where is this? University of Michigan inflation expectations 1 year 6.7% versus 5.2% estimated and 5% prior. So it's a massive jump month over month. And the 5 to 10 year inflation expectation of 4.4%, that's also higher than expected and higher than prior. And the sentiment was also worse than expected, much worse. And the independence is really what I look at. I mean, there's some political aspect to this, obviously, but the fact of the matter is the average Republican voter is less educated than the average Democrat voter. And I'm not surprised that Trump's base believes him when he says tariffs are not inflationary, which is obviously complete horseshit. And some of this kind of talking, oh, we lowered the reciprocal tariffs, from everybody else, but then you kind of do the average tariff rate, and it's still like 7 times what it was before. So it didn't make a difference. But there's a lot of kind of headline chasing. God knows why, but um, but the way things stand right now, we're still heading to a very deep recession, I think. So consumer sentiment is imploding. Importantly, consumers see a negative supply shock. Inflation expectations have jumped while employment expectations have plunged. Inflation will likely pick up, but consumers are not really in a position to bear the burden or cost of tariffs. Yeah, this is exactly what we've been discussing. Mortgage rates are at 7.1%, so expect a absolute just plunge in housing activity in the coming days, weeks, maybe if this continues. Um, looks like the 30-year yield is going to hit 5% again, and 10-year is headed in that direction as well. Although I don't know if the economy can stay up. I think today is the day we kind of like see the peak of this dead cat bounce. But New York Fed President John Williams said expect inflation to rise this year to 3.5 to 4%. Expect GDP growth of somewhat below 1%. Expects unemployment rate to rise to 4.5 to 5%. Inflation expectations have remained well anchored. I think they're just talking about the very long run inflation expectations, but those are changing too. Consumers expecting higher unemployment in the year ahead rose to 67% in April per University of Michigan, fifth consecutive increase at the highest since 2009. Yeah, that's a big deal. That's a big deal. That's recession. It's never been at these levels without a recession. So we're most likely in a recession at this time. Lucid has won a bankruptcy auction for electric trucking company Nikola's Arizona factory. Lucid committed around $30 million in cash in exchange for the factory and plans to make offers to around 300 former Nikola employees. So Lucid, I think, I think it's just a way of Saudi Arabia limiting Tesla's growth and margins. So by financing these massive losses, and they can keep that going for many years, if not decades. So it's going to be interesting to see what happens to Lucid. Um, PPI was lower than expected. However, year-over-year PPI is still very high, still very high. And year-over-year core PPI is 3.4%. So, like I said, some of these PPI, CPI numbers are just going to be disregarded for many months to come because tariffs are going to take up to a year, really, to work themselves through the economy. There's some talk of financial markets dysfunctioning and the Fed potentially coming in to help, but I don't really see that happening. I think these yields are going up because of good reasons. These tariffs are inflationary. Tariff wars are very inflationary. The budget deficit is continuing to grow. Doge has done nothing except noise, and the Republicans are insisting on these tax cuts continuing. So the budget deficit will continue to grow. And as long as that happens as a percentage of GDP, there's risk of yields rising as well. So I don't expect, I think yields will probably persist higher until the economy collapses. And what happens after this is up for debate, actually. All right. On that note, happy Friday, everybody, and I'll chat with you all next time. Take care.